In the banking industry, there's been a lot of movement towards greater regulation. And in the US today, you find that the Federal Reserve Bank wants, greater mandates to do what it wants to do. And it wants to behave like a banking prudential regulator as well as a macroeconomic, regulator in that sense. And the politicians are getting into the fray. This whole thing about stress testing is something in banking which banks have always done. But today, the politicians are looking at the numbers and taking a view as to what needs to be saved and what needs to be let go, if at all they let go institutions. What's your take in terms of how the banking industry in the U.S. will play out in the next 18 months?
Well, the banking industry and the insurance industry have always been, and the mortgage industry have always been regulated in America, and that's where the problems arose. They arose in regulated areas. The unregulated areas of the American economy did not cause the problems. It was the regulated areas that caused the problems. Now they're calling for more regulation. It wasn't regulation that was the problem, it was the regulators. They were incompetent people. They didn't do what they were supposed to. Otherwise, we wouldn't have these problems right now. And then when there were problems, they stepped in and saved people rather than letting people fail. Now, had the regulators had half a brain, and had they done what they were supposed to, and had they let people who failed fail, we wouldn't have these problems right now. So the idea that we're going to suddenly have more regulations, and that's going to solve our problem, is laughable on its face. That's not going to solve the problem. I mean, you might get more regulators. Well, great, wonderful. That's not going to solve the problem.
Where were you in 1999 when the Fed stepped in to try and deal with LTCM, for example?
Well, that was 1998. I was railing and screaming and saying, "Let them go bankrupt." It's a terrible.
And why
mistake.
do you think the Fed stepped in the first place? What was happening behind the scenes?
Alan Greenspan was the head of the Federal Reserve. He was a peon of Wall Street. All his career had been trying to get involved with Wall Street firms, and they called him up and said, "Save me, save me, save me, save me." He went and saved his friends on Wall Street. That's all he knows.
Right. And do you think that the Feds make certain assumptions that we need to question today?
Of course, we need to question the Fed for the past 20 years, for goodness sakes. Because nearly everything they've done in the past 20 years has led to problems. We always need to question anybody, but certainly the Federal Reserve in the last 20 years, they made one mistake after another. It's staggering how many problems that we have now because of the Federal Reserve.
Right. And what do you think should happen in the States in terms of the mandate given to the Federal Reserve Bank as opposed to, say, the FDIC, for example, and the dynamics between these two?
The best thing you could do for the Federal Reserve is abolish the Fed. I mean, the Fed we wouldn't have most of the problems we've had. Remember, they're just bureaucrats that are get this job. They get these government jobs. If we didn't have the Fed printing all this money and taking on all this gigantic debt, we wouldn't be having the problems we're going to have down the road. And remember, the Federal Reserve was supposed to be the ones looking after all of this. The Federal Reserve caused the dot-com bubble. They caused the housing bubble. They caused the consumption bubble. Mr. Greenspan kept printing money. Every time things got bad, he called his friend. When his friends called him, he bailed them out. He lowered interest rates again. If Mr. Greenspan had let people, if he'd let the market work, if he'd let long-term capital management fail, for instance, we wouldn't have a lot of these problems we have right now.
How much regulation should there be in place to manage all of this innovation taking place in financial services?
Well, what I'm trying to explain to you is so far the regulation, which you keep calling for, has not worked.
Okay.
It has led to more problems because when the innovations have led to problems, the government has stepped in to save people instead of, now, had they let long-term capital management fail with all of its innovations, Bear Stearns would still be in business. Lehman Brothers would still be in business because they would have taken such hits, the financial community would have. The capital would have been impaired. They would have had to fire a lot of people, incompetent people who then went on to become even more innovative, as you put it, and cause even more problems. So if we didn't have the Federal Reserve, we'd still have Lehman Brothers. We'd still have all of these guys going forward, because the market would have regulated itself. Right now, or then, everybody said, well, the Federal Reserve is on top of things. The SEC is on top of things. We don't have to worry. Well, that was nuts.
Right. Do you see that the institutions will go back to being what they are? Do you think that they will, there will be real transformation, there will be good regulation in place?
If you want good regulation, first of all, you've got many more regulations, and you don't have more regulators. And even if you do have more regulators, what makes you think they're going to be any more competent than the previous regulators? First of all, they'll probably be less competent, because you're going to have many, many, many more of them enforcing many, many, many more regulations, and so the situation is only going to get worse. Remember, America's had 3 central banks in its history. The first 2 disappeared. In my view, this one's going to disappear too, because it's going to destroy. It's in the process of destroying itself. And the regulators are just. Why do you think that we're all of a sudden going to have a group of very competent? It's going to have to be more than competent. They're going to have to be geniuses. And most of the geniuses don't go to become regulators. They go to become innovators and to start new products, new things. Now, one of the great things about innovators is some of them are geniuses, but some of them are failures. And the ones who fail clean out the system and keep the system straight, because all these other guys say, well, he's going to fail, so I'm not going to give you my money because you might fail like he failed. If nobody can fail, then everybody fails in the end.
Thank you very much, Jim, and thank you for spending time with us today.
Thank you. My pleasure.